We have been getting a very interesting, cracker stocks to say the least over this whole week. We started yesterday with some key stocks and today as well, continuing the trend. When I'm now being joined by Avinash Gorakshakar. He's the Director Research at Profitmart Securities. And, largely, Avinash, a very good morning to you and thanks so much for joining in. I want to start with a key question. What is your view currently on the markets and where do you actually see the Nifty going forward till the next Diwali?
Yeah, good morning, Punit. I think currently the mood is definitely a little bit uncertain because markets are now in the earnings season. Markets would be awaiting a lot of betterment in quality in the earnings numbers for Q2. But I think overall the market is waiting for the big event to unfold. That is on the import tariff issue. I think unless and that point is cleared, and obviously things are a little clear, you're going to see a lot of wobbliness in the markets. Like today, we saw the market opening on a good positive note, but thereafter we saw profit booking. So my sense is that this kind of volatility will continue. We also need to see stronger FII flows, which are yet missing from the market. I think the domestic SIP money is definitely a big positive, but I think the real trigger would happen once the import tariff issue is cleared and the FII flows, come back to the markets in a big way. So net, I think, the macros definitely are looking good, but on a stock specific basis, I think we'll have to evaluate how the Q2 numbers shape up. But yes, I think it could be a good stock specific kind of approach which could help the investors as of now. So we are advising our clients to not look at the index but look at specific companies where growth trajectories over the next 12 months look quite promising. And as far as the index is concerned, I think once we see both these events unfolding, that is the import tariff and the FI flows, probably even 26,000 or 26,500 is possible. But I think we'll have to wait and watch. The key driver for the markets would be the corporate earnings. That has taken a backseat for the Q1. So I think corporate earnings, if they stand out better in the second, third quarter, I think that would give a lot of confidence to the markets, and obviously you could see a good amount of re-rating happening.
Right, understood. Well, hi Avinash, Varsha this side, pleasure to have you at NDTV Profit. Well, Avinash, just wanted to have your view on top sectors, when you would bet on when it comes to Diwali.
No, I think sectors to bet on would be, obviously companies which are going to be impacted positively largely by the GST cuts. I think automobiles, auto components, typically, consumption related themes like consumer durables, typically some industrial sector like cement. Our sense is that wherever companies have got a large domestic base, that is something which is going to be focused more by the markets. In fact, hotels and hospitality could be one area where possibly you could see a good amount of traction, because this is one sector which has done remarkably well in spite of the challenge, in the domestic market. So I think hotels, hospitality, auto components, cement, and some select capital goods names could possibly be, sectors which I think investors should watch out. I think these are probably, sectors which are waiting to see a lot of pent-up demand materialize into actual order book and then conversion into top line and profits.
Avinash, my final question to you. What are the three top stocks that we should have on focus on in terms of our cracker stocks for this Diwali? Is it largely from the spaces that you mentioned?
I think one stock which is a part of our recommendation to our other clients is Indian Hotels. We find that the stock has been consolidating at around 722, 26. I think, the second quarter numbers are going to be quite solid. Our sense is that somebody who can hold on for the next 12 months could easily expect a price of 875, 900. Our sense is that this year the profitability could be quite significant. Last year they made a bottom line of 2,000 crores. This year it could be very close to 2,400 crores. The second stock is from the real estate market. I think just recently this company made a QIP, that is Anant Raj Limited. And I think the kind of response it has got on the QIP has been quite significant. So I would believe that this is also one interesting company which has got a mix of real estate and data centers. And it would not be surprising that in the next 2 years, the data center business would actually overtake the real estate business. So here we are quite positive. Our sense is again from a 12 to 18 month kind of time frame, price of 750, 800 is very much possible. And the third stock, Puneet, is very interesting. We recently met the company. It's a company which is into the robotic space. It's a company called Affordable Robotic and Automation Limited. Now they supply, driverless robots to US warehouses, and this business is going to be a very big trigger for them in the coming 12 to 18 months. Already the company has turned around in the second quarter, and they already have two other divisions, which is robotic welding arms, which they supply to many manufacturing companies within the auto sector. They are also present in the car parking sector. But what is interesting is that the company is available at a very attractive valuation of just about 275 to 80 crores market cap, wherein this year the company should turn a profit of around 11 to 12 crores, and next year the company is targeting a bottom line of 25 crores. So it's a fairly risky bet, but it's a contra bet. I think investors should also definitely use this opportunity to park some of their funds here, because within the robotics and AI space, there's a lot of interest. And if this company scales up in the right way, we could look at targets of around 330, 340 over the next 12 months.
Got that, Avinash. So Indian Hotels, Anant Raj, as well as something like an affordable robotics. Thanks so much for joining in, Avinash, giving us perspective for some